That is where we are headed. We are going to return to the gold standard. That is the norm throughout modern history, was to have gold as money. I mean, that's the problem with our current monetary system, is that we don't have any money anymore. We just have paper. But currency needs to be backed up by real money. And that is where we're headed. So it's not a question of will or even if we're going to return to a gold standard. The question is when. How soon is it going to happen? The sooner the better, as far as I'm concerned. But I think we're a lot closer now than we've been in the past. And I think that circumstances are certainly evolving in a way that makes not only that return inevitable, but close at hand.
Peter Schiff, chairman of SchiffGold and founder and chief market strategist of Europe Pacific Asset Management, discusses that the idea of a gold standard is gaining traction as central banks grow wary of the fiat currency system, which lacks the stability that gold provides. Once gold-backed, the US dollar is now viewed as vulnerable due to rising debt and uncontrolled money printing, while gold remains the ultimate safe haven. Contrary to misconceptions, the gold standard proved effective during the 180 years it was in place, marked by stable prices and robust economic growth. Since abandoning it, US growth has slowed, and inflation has persisted. If the gold standard had continued, median household income could be $40,000 higher today. Despite skepticism, a shift back to gold seems increasingly plausible. Central banks worldwide purchase gold at record levels, particularly in nations like China, India, Russia, and Poland. This strategic accumulation reflects a growing distrust in the dollar's long-term value, driven by perceptions of US economic decline. Emerging market economies, notably India and China, are at the forefront of this trend, quietly but deliberately boosting their gold reserves year after year. This move signals a potential realignment of global financial power as these nations seek to reduce their dependence on the dollar. According to Peter, returning to the gold standard would mark a monumental change for the US, stripping it of the unique privilege of printing the world's reserve currency and forcing it to back its money with actual gold reserves. This would end the era of unchecked dollar printing and impose strict fiscal discipline, requiring the US to earn gold through exports. The adjustment would be smoother for other nations. They already earn dollars through trade, so swapping dollar reserves for gold would help shield them from US economic volatility and reduce dependence on US Treasury bonds. As central banks steadily accumulate gold, the world may be on the brink of a major financial realignment that could alter the global balance of power. Please tune in for our exploration of Peter Schiff's expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. We appreciate your support.
People are complacent. Oh, the dollar will be the world's reserve forever because no other currency can. Paper currency needs to be backed by real money. That's the problem. We have a monetary system right now without any money. We need to anchor the system with real money. The paper is a money substitute. It only has value if there's real money backing it up. And gold is the best real money that we've discovered. And that's where we're headed. So the question is, when does the world go back to the gold standard? Not does it, but when? But the history of the world for hundreds of years is gold is money. That history hasn't been rewritten. Gold's going to continue to be money for a long time. This period where it wasn't used as money will be a footnote in history and a lesson to be learned. So this has created this false sense of complacency that the dollar will remain the reserve currency indefinitely because there's no other currency that can take its place. But people are missing the elephant in the living room. The obvious choice to replace the dollar is what the dollar replaced, and that's gold. And so that is where we are headed. We are going to return to the gold standard. That is the norm throughout modern history, was to have gold as money. I mean, that's the problem with our current monetary system, is that we don't have any money anymore. We just have paper. But currency needs to be backed up by real money. And that is where we're headed. Certain countries want to back their currency with gold, and then other countries want to hold those gold-backed currencies as reserves. I suppose they could do that, but based on history, that it didn't work out that well when people put their trust in the United States. So I think it makes a lot more sense for central banks to own their own gold reserves and have those reserves to back up their currencies. And I think that is the move or the direction that the world is going to be headed. So instead of holding on to U.S. dollars, which they then loan back to the U.S. in treasuries, central banks, foreign governments will hold a gold reserve. Whether they make their currency officially exchangeable into gold at a particular rate, we'll see. I mean, that would be an improvement. But to the extent that they continue with paper money, the primary backing for that is going to be gold instead of U.S. dollars. For the rest of the world, it's not a big change because they still had to earn those dollars, right? The only country that can print dollars is the United States. So if you're a foreign country and you're accumulating dollars, you might as well just accumulate gold because you still have to earn it. You still have to generate exports and have flows coming in to buy that gold. Or, of course, some countries, they can mine it themselves, right? And then the governments can buy it right off the miners. But the big change is with the United States. Because when we are back on a gold standard, or when the rest of the world is no longer on the dollar standard, then we don't get a free ride anymore.
Right.
We need to earn gold to back our currency, and we need to export to import, because right now countries export over $1 trillion a year of goods to America to get dollars, right? As to back up their currencies, but they're not going to need those dollars anymore. They're going to need gold, and we don't have that. I mean, we do. I don't know that we're going to sell off the gold that we have, but what's going to happen is we're not going to be running those trade deficits anymore because the world's not going to need our dollars. They're going to need gold. For the rest of the world, it's not as big a change, but it will rein in governments to the extent that they want to keep running deficits. It's going to be a lot harder to do that with gold than with the U.S. dollar.
Right.
And I think interest rates globally are going to be a lot higher than they have been, and that's also going to be a big change.
The potential for the U.S. national debt to reach $100 trillion or even $200 trillion over the next 2 decades presents a concerning outlook for an economy already under significant strain. This situation can be likened to a camel overloaded with straws. While it has managed to bear the weight thus far, there is a critical juncture where one additional burden could precipitate collapse. In the past 20 years, gold prices have surged more than 8-fold, significantly outperforming traditional market indices like the Dow, even when accounting for dividends. This dramatic increase reflects growing skepticism towards fiat currencies and a renewed appreciation for gold as a reliable store of value. Despite gold trading near record highs, it remains one of the most underappreciated bull markets, with limited involvement from institutional investors, hedge funds, and the general public. The market has yet to fully recognize or embrace this trend, with skepticism still prevalent. Peter Schiff's predictions that gold could reach $3,000 or more are becoming increasingly plausible. Some forecasts even suggest that $5,000 might be a conservative estimate, given recent years' relentless money printing and inflation. The price of gold could rise rapidly, especially once mainstream investors begin to take notice, moving beyond its current undervalued status.
I don't think gold is going to trade back below 2,000 again. I mean, I think those days are gone. I think the new support is probably just below 2,500. Is it possible that gold can go below 2,400? I suppose that's possible. That could happen. Maybe 2,350. I wouldn't wait for that. And I've been telling our customers at SchiffGold not to wait for a bigger break in gold. I just think you buy gold here. I think 2,500 is the new 2,000. I mean, and I don't think 2,500 is gonna stay here for long. I think we're going to be at 3,000 before we know it. Maybe we could get there before the end of the year. We could start to see some bigger moves. But even if we don't close the year at 3,000, I think we'll be closer to 3,000 than 2,500 by the end of 2024. But 2025, I mean, price can go much higher than that. I mean, I was calling for $5,000 gold back in 2010, 2009, and we didn't get there. We got to 1900. I think 5,000 is low. I mean, my target is much higher now because we've printed so much money since then. There's been so much more inflation that's been created that gold is a lot more valuable in terms of these inflated dollars than it was, back then. But I think we're going to start moving quickly at some point in the price of gold, especially when you start to see investors buying. I mean, they haven't bought into this rally. I've been talking about this is the most unloved gold bull market. You could buy gold at an all-time record high, and you're a contrarian because nobody believes in it. Nobody cares. Nobody covers it. The public isn't buying it. The hedge funds aren't there. The pensions, the endowments, nobody is buying. It's at an all-time high. So it's going to have to go much, much higher to get on anybody's radar, and then even higher to get the naysayers to capitulate, throw in the towel, and start to buy. Maybe the last ones will be the hardcore Bitcoiners who finally try to buy whatever gold they can afford with what's left of their Bitcoin. But eventually, you're just going to have a lot of people coming into the gold market. It's not just going to be some astute central bankers in the BRIC countries that are buying the gold. Me and my followers, there's just a small number of us that have been buying. We mentioned last time, we met at the New Orleans Investment Conference. Hopefully, I'll see you there this November. But that's like the oldest gold conference in the country. Biggest conference. We get like 500 people that show up at that conference. They just had the Bitcoin conference in Nashville. Maybe you were at that one, but I mean, there were over 20,000 people there. So that's where, the excitement is, right? That people are ignoring, what's gold, but, you don't want to enter a crowded trade, right? You want to be in the market that everybody isn't overly enthusiastic about. I mean, normally the gold stocks lead the metal because investors are so confident that they want to buy the gold stocks. Now the metal is dragging the gold stocks reluctantly. And every time, look, yesterday, gold was down 0.5%, and gold stocks are down 4 or 5%. They just got clobbered on 0.5% move. Today, gold pretty much regained the entire 0.5% it lost yesterday, and the gold stocks were down again. That's how scared. The minute gold got below 2,500, that's it. It's going to crash. Get out, sell. Right? I mean, talk about climbing a wall of worry. This is the steepest, biggest mother of all walls of worry that I've seen in a bull market.
If gold were to surge to $5,000, as predicted by Peter Schiff, it would indicate a significant erosion of confidence in fiat currencies. Such a rise would underscore a significant shift towards gold as a trusted value store driven by increasing economic instability and persistent inflation. This likely leads to re-evaluating investment strategies, with gold becoming a central focus, as fiat currencies struggle to maintain their appeal. Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.